week ahead of Fed Chairman Bernanke's speech, the market had very little movement and it was sideways. And so once the speech came out, then it became more volatile. So that was mostly a timing issue and also a volatility issue. Okay, let's look at another chart, and you'll see that this is a triangle chart pattern on a 30-minute chart. And once again, this looks like a triangle. It may look like a descending triangle to some if this was a little bit flatter. But clearly, given the time to move within a particular range, AutoChartist is going to pick up a pattern that is clear to a trader. And the beauty of working with triangle that look, excuse me again, the sensitive mouse there, that looks like a triangle is that as this pattern compresses, as the support moves up and resistance moves down, it's starting to show you clearly an area that the market could break out of. Okay, you could see that the triangle, these 2 points, support and resistance line, are eventually going to hit an apex. And so it's basically telegraphing when the market's likely to move. Now again, we got to look at the data this August 24th. If that was a time period of low volatility. So during periods of normal volatility or high volatility, these breakouts will move a lot faster. Okay, but using this as an example, it's a high clarity pattern. There's a lot of time here, 274 30-minute bars, candlesticks to look at. So this represents a pretty high clarity rating. All right. Also, you can see once again that the uniformity is high. So these two tend to move together. Now here, the initial trend was low, and the breakout here was about average. But again, those were kind of out of sync, and the market didn't go up quite as much as it was expected to. Also, remember that the time you're trading, if you're trading ahead of reports, if you're trading ahead of key announcements, that you're going to get this sideways action, and not until after the results are out do you get the actual volatility and breakout. So that could help you with your trading. You want to look for a clear pattern, and you want to make sure that you're trading at a time when there's activity. If you have low volume and low volatility, even the best patterns fail, because those are the two things that are needed to drive the market. It's like the gasoline in the market. You want to have that. You want to have a market make a move, and you want to have somebody there to trade it with you. Okay, so that's going to help you in the future to make sure that you find your patterns with high clarity and uniformity, but that you're also trading them at times when they're likely to move. Okay, and let's look at a third chart. This is a rising wedge pattern. Again, a wedge is defined as really it's a combination of a triangle and a channel. Now, as far as the triangle is concerned, it's these support's going to go up and resistance going to go up, but based on the angles of the movement, they're not going to touch like a triangle does at that apex. And at the same time, the channel is not, the lines are not parallel. So that's what you want to see when you're looking for a wedge. Okay, so AutoChartist has picked this up as a wedge. Okay, this is a 60-minute, but we have a length of 102. Again, it's low. I like to see them over 100, so it's the low end of a particular range. All right, in this one, you really see no rating for clarity, because it just AutoChartist has picked it up as a pattern that, although it's making a rising wedge, if you look at the connection between this bottom and this top, and you see these spikes and this rapid movement, you don't see, you may see a wedge, but you don't see something clearly defined in there as you did the previous two charts, where there was definitely a relationship between tops and bottoms, with price and time, and you had price symmetry, you had time symmetry. This looks disjointed. At times you've had elongated moves, and then you had congestion. So that's why AutoChartist isn't picking it up as a clearly rated pattern right now. If we look at this chart, this really defines what clarity, low clarity rating would look like. And in this case, what I'll do right now is I will take a break and ask a question. So if you're if you look at your questions, you're going to see a click up here, and the first question is being asked, and that is, true or false, clarity refers to the level of noise in a price graph. Okay, we've got half of you voting right now, and so far everybody is right. So I should probably say good night, everybody. I accomplished it. Got my whole class getting the right answer. Very good. You're paying attention. All right. So yes, it is. It's the noise. And again, there's various definitions of noise. And the thing that you want to do is avoid the noise. Place stops outside of the noise. You know, that type of thing. You want to look for charts that are not noisy, something that's clear. So that's very good. Okay, now moving on, we're going to look at this clarity 1-bar rating, and you can see what you have here, the numerous spikes on the swings, and you also have individual candle spikes with long wicks. Okay, it doesn't mean it's not going to break out, because that has to do with, again, initial trend or breakout. But what you want to do is you want to make sure there's a pattern there that if it's appealing to you, it may be appealing to an institution. It may represent institutional buying. You want to make sure that it is appealing to other traders, and you want to make sure that you see what you believe to be the pattern you're looking for. And again, that goes to a personal preference or the art side, the art equation of trading, but at the same time, it's giving you confidence and it's giving you some clarity. Then that is going to help you become a better trader. And here you see very choppy trading, and that's leading to a low clarity rating. All right, now to flip back a few charts, I'll show you a 10-bar rating. You can see here how smooth it is, and you also have a long length. When we go to this chart, the length is over 140 on a 60-minute, but it's still, the channel looks good, okay, but the individual swings are very difficult to understand. All right, now I'll talk here now on this screen a little bit about the length, as I was mentioning. When I was searching for patterns and learning how to work the filters in AutoChartist, I started playing around with various levels of clarity from a rating of 0 up to 10, and also so what came out, what I started to notice in my observation was when these completed patterns on this side showed up and my emerging patterns showed up. Okay, now what I saw here is I sorted these by lowest to highest. So I noticed that you saw when I wanted a high rating, like a 10 rating on clarity, that there are only 3 under 100, and that the rest started to gradually go up. All right, and the same with emerging. There were only 2 or 3 patterns here that were low rated, and then they jumped to over 100. So that kind of tipped me off that if I wanted to see a high clarity rating, that I should be setting my length indicator at a high point. So if I take time here and look at the live data, you can see that when I go into AutoChartist, the AutoChartist platform, and I want to look at the clarity, say, of a stock index, I can hit the edit button, or I can go to new search, and it takes me to this window here. And when I go down to advanced search, I have the ability to go in here and set my minimum pattern length to whatever I want, from 0 to 200. So you can see I've selected 100 here, so it's a minimum pattern length, so I'm having it search for only patterns that have over 100 candlesticks in them. Okay, now this I've also set the clarity to 0, but I can set it as high as I want. I can set it to 10, and now it's only going to look for patterns that have clarity over 10 and at a minimum are 10 bars. Okay, so I have the opportunity, I can slide this bar to average, and it's going to pick up 5 or more. And again, the key is it's not going to find anything that has low clarity. Okay, now that's because I'm searching for all stock indices. If I wanted to, as I mentioned about the relationship between the chart you're looking at and clarity, I can go to this particular search engine, and I can pick out 15-minute FX majors. Okay, if that's the time period that you want to trade on, you have to remember, for clarity purposes, that the shorter the time period, the greater the noise. So in order to avoid having it select markets that are very choppy, when you have a low time period, make sure that you set your pattern length on high, okay, because that is going to help filter out choppy patterns. Okay, so that's one tip that you want to look at. So if I look at the 15-minute, I set this at 5, my clarity, and I set my minimum length at 100. Let's even go up more. Let's look at 140. So I'm not even going to look at a market on a 15-minute chart unless I've had 140 minutes or more, or 140 candlesticks or more. I also have the choice to work with other indicators as see fit, and those are, we'll talk about those at other webinars. But at the same time too, I can deselect or select any chart pattern that I want to look at. So we'll look at them all, and we'll see what comes up this morning for 15-minute Forex majors set at a high time period. May not have any because, again, depending on the market conditions. Okay, so we can see these lengths here that are coming up. Even setting at a minimum of 140, you can see that there are some markets here that have come up in the last couple of weeks that have set up completed patterns with minimum lengths of 140. So all this chart is crunching data here. You can see that types of patterns that it's selecting. So it is a valid filter, meaning that there are examples that do come up, and that it is possible to find patterns that have these high settings. Okay. Now again, if you went to a low setting on the 15-minute chart, then you're going to get, chances are you're going to get some choppy patterns. So this is one that is fresh this morning, US dollar, Japanese yen. Let's see what this looks like. All right, that's an emerging pattern that's taking place, and it represents, it looks like about a about an 8-bar clarity rating. Okay, so it's not quite the maximum, but we set it at 5. But what you are looking at here is you're looking at a fairly long pattern on a 15-minute chart, which is giving this pattern a time for traders to look at and make a decision. And since it's a rising wedge, this support resistance line is compressing but not touching out in the future. This is kind of like the triangle pattern. This wedge is telegraphing a potential breakout. So if you want to look at emerging patterns, look at patterns that are showing this compression, and then look at patterns that have had a long length of time if you're using low time periods, and then you'll get more opportunities to trade these breakouts. So again, it's not always You know, you don't always want to be in the market. So a lot of traders like to just trade